Welcome back. This is part 2 of episode 5 of 0.5%. In this part of the episode, we'll be going over a crypto trade that I did. We're going to start by looking at the spreadsheet. The trade I'm referring to is here. ADA traded on March 15th. This is Cardano. Bought 200 shares at approximately 75 cents. And I intentionally say approximately because if we click on the sell, you can see the actual value of each coin that I paid for at the time. It's still in dollar values, but does go out quite a bit of ways decimal wise. And when you're performing your calculations or when I'm performing my calculations to set my target sell at 0.5%, that comes into play. But this trade, I took a loss. I got out, I think, in less than 30 seconds, and I'll show you why here in just a minute. But you'll see I took a 1.147% loss in less than 30 seconds. Fortunately, dollar-wise, that's almost $2. But let's take a look at the chart and see exactly what was going on. All right, so I've pulled up Cardano on Yahoo Finance, and today is March 18th, so you'll see the chart carries on for quite a ways after today. But let's look at the morning. You'll see there's no shading on this chart, similar to our stock charts we've been looking at in previous episodes, because the crypto market is 24 hours. So you'll notice at the bottom all the way till from 12 a.m. to 12 a.m. of a day, moves are being made. One thing to note here, though, is I am looking at the 5-minute calendar. Not sure if I'm using the terminology for this right, but the volume the volume of Cardano being traded on the 1-minute time frame, as you can see, does not. Every time I change time periods, it adjusts the date. So scrolling into where I bought, you'll see here, this is still a candlestick graph, but these candlesticks have basically no body and they have no wick. The price isn't fluctuating much on the minute to minute. So to help us visualize, and also at the time what I thought was going to help me trade, was by watching the 5-minute chart. So zooming back out, I'm not sure what time I started looking at the chart, but it was at approximately 10:55 when I bought in and when I sold. That's this red candlestick here. So let's zoom back out for a minute. I know I wasn't looking at the chart before 9 a.m. So I must have gotten up in the morning, checked the day, watched the trading pattern. It's coming down, staying between the 20 moving period and the bottom Bollinger Band. Caught its route up here. And if I was trading at this time, although it did have a nice run up here, this would not have been an ideal crossing of the moving average for me to buy at, because if we look, the MACD is crossing from the 15 is crossing the 30, but it is still in the negative. And as part of my rules, I do not trade in negative MACD. So let's come to 9 o'clock. This is probably where I started watching. Drew a little support line here that goes back to the previous night. Seemed to have caught support not only there, but also on the 20 moving average of the Bollinger Band. So keeping my eye on it. I think I got in here because I was expecting it to come over the MACD was still positive, and the price was not deviating as far from its moving averages anymore. Looking at the 1 minute, or let's go down to the 3 minute chart. Oh, I gotta go back to where it was. It's the worst part. Okay, zooming in. 3 minute chart. All right, this looks pretty good. So it's crossing above, it's come back down and checked, and it's continuing its run. Normally all of this would look good to me. So let's go back to 5 minutes. And then furthermore, where I did buy in, it did have a decent run up from, let's see, from about 0.747 to 0.754. Not exactly sure if that's 0.5%. We can check real quick. 0.754 minus, what was it, 0.747 equals divided by 0.747. Times 100%. Can't think right now. It was 0.9%. It would have definitely hit my goal. But here's what's happening. So when I bought in, I did not specify a target buy. I did a market buy. And this resulted in, actually I can show you. So what I've done now is I've pulled up Cardano. This is today. This is current price fluctuating. But this is what I want to point out. So I was excited to buy in for my position. I just went straight into it, threw down, I don't know what it was, like 200 shares, $100 or something, because I just wanted to practice. Hit review order. So let's see if I can do it here. Let's just say $100. Review order. Check this out. This is what threw me off and I didn't know. The buy spread. 0.63% included in the price, estimated price. Look at the estimated price. What is it? 0.7109. And look at the actual price. 0.706. There's a already, now that's gone up 0.62, 0.66 I just saw. The buy spread, what is that? It is what people are asking to buy the stock for and what people are bidding to buy the stock for and what people are asking to sell it for. I think I said that right. Fortunately, I've pulled up some research because this threw me off pretty bad. Luckily, didn't lose much, but it was a quick learning lesson. So first things first, let's check this out. So let me see, is this the best one to look at? Okay, yeah. So first thing, what I did, what is the 0.6 fee that goes to Robinhood and crypto trades? Because if we look here, what is the buy spread? Here we go. The spread is calculated as the difference between the ask and the mid price. It's included by trading venues and the ADA ask price. Robinhood receives 0.6% of every executed trade. Yeah, price includes the trade that goes to Robinhood's. So if we see here it's 0.63, that means the spread is really only 0.03%. But there's another 0.6 going to Robinhood. So I was trying to figure out, what is this? So on Robinhood, there is a 0.6% fee for crypto trades. It's a markup on the trader price rather than a direct commission. So there are no direct commissions. If you go to other brokers like I think like Binance or Coinbase. I'm not sure exactly. We'll scroll down. Maybe some of these answers will be questions, or some of these questions will be answered. And they have a fee for each trade. Sometimes 10%. I think up to 10%. I saw something ridiculous, but from what I've seen out there, Robinhood is the best place to do it still. Yeah, so instead of a commission for making a trade, they do have a very small percent fee, but relatively small. This is where it throws me off the most. If I was buying at a price expecting it to run up 0.5%, and I get the crypto at a price that's 0.6 higher percent than what it's currently in the market, now I need the price to go up from where it's at, what is it, 1.1%, completely throwing off my entry and exit strategy initially. It can be calculated in now that I'm aware about it, but this is the lesson here. If you're jumping into it quickly, you're making a market buy, you have to be aware and willing to accept whether it's a markup or a commission fee. It has to go into the plan, which is going to make trading crypto, I don't think, that much more complicated for me, just a little bit more biding my time. I think the best way to approach this is, rather than watching that minute chart of when I can maybe catch a 0.5% swing, if we watch maybe the 30-minute chart, these run-ups will be much more significant. For example, this one in the morning from 68 cents all the way to 75 cents if we round up. This, like, for example, where would I have liked to have gotten in on this trade? Not negative MACD, maybe here, crossing over. I know probably from here to here I could have caught a 0.5, but I think the key to incorporating this fee is going to be looking at a slower moving chart, or just like a larger period candlestick, and catching a longer trend that is going to make that run. Sometimes on that 1 minute chart, it's up 0.5%, down 0.25%, up 0.5% if it's going up, or vice versa. And yeah, I'm not sure of another way to get around that fee. So that's the plan. But let's go back and see if we can read a little bit more. There's some other things that I found. So 1 cent minimum fee crypto. Robinhood is consistently cheaper to buy from any other exchange. Though Robinhood crypto doesn't charge fees for transfers, every crypto transfer does require a network fee. Network fees or gas fees are paid to miners who process blockchain transactions. Where was another good page? So this is on NerdWallet, Coinbase versus Robinhood comparison. So minimum trade, 0 fees. There's only 15 cryptocurrencies on Robinhood. So that's pretty nice. Minimum trade $1 for this is Coinbase now. More than 250. So I guess it just depends on what you're looking for. I was looking for some practice at the time. Not financial advice, of course, but I do think crypto is due for a run-up, so I will be keeping my eye on it. But yeah, that's what I wanted to talk about for this trade. I think I got one more page open up here. So yeah, this is I think what I was trying to explain earlier. So calculating the bid-ask spread is simple. For example, if a stock has a bid price of 19, the ask price is 20, then the spread would be $1. Due to their high liquidity in heavily traded stocks, such as Google, Apple, and Microsoft, they tend to have smaller bid-ask spreads. So this ties in perfectly. In part one, we traded Google, and we remember those candlesticks had some body. There was some volatility. I guess the volume of shares being traded, the liquidity, or heavy traded stocks, make it so what the market price is, if you do a market buy, you're gonna get pretty close to it. But I think I also said yesterday that some of these cryptos have market caps similar to medium and large cap stocks, but there are still differences. I'm still learning a lot. Like I said, I'm amateur at a lot of this, but I thought it was a fun lesson to learn, and got some things to look up moving forward. But I'll definitely be a bit more cautious trading crypto in the future. All right, thank you for watching, and stay tuned for episode 6. Thanks.